Hello and welcome back to a new video. This is the Wolf of Future Street. I'm going to make a series of videos describing my strategy. But before I deep dive into my strategy, I thought I'll take some time off and explain what my chart looks like, and what does each of the lines that you see on my chart, very colorful lines on my chart, what do they actually mean? Okay, so this is a video to break down the key components of my chart, uh, and hopefully those things make sense, the strategy and the details around the strategy will become even more simpler to understand. Okay, so let me start off by talking about the primary thing, which is the time frames. So I basically look at the 3-minute time frame for my entries, and I also have the same chart on a 15-minute time frame, and I use the 15-minute time frame for the overall perspective, and then I look at certain patterns on my chart on the 3-minute time frame, and then take trades on the 3-minute. Okay, that being said, let me now break down what you see on the chart, and I'm going to first focus on the top chart. Uh, okay, before I start into those details, I just want to preface this video by saying that I am based in India. I do trade futures exclusively using prop firms, but but I don't really look at the regular hours, which is this whole green, oh sorry, black shaded area. So all of this is something that I usually don't trade unless I haven't made money in the pre-market. And when I say pre-market, I usually start my trading day uh, by around 1 a.m. and all of these times are Eastern, New York Eastern, right? So this is where I usually start, and I try to finish before 8:30. Uh, so that's what I basically try to do. I usually trade here, and my my observation has been that this time is a fairly good time for anyone who is able to trade futures, because it is less volatile compared to the regular trading hours. Obviously, the regular trading hours obviously have a lot more opportunities because price tends to expand much further in the regular trading hours. But given my outlook of what I do, which is scalping, for me, smaller expansions also are pretty good. All right. That being said, now let's get on to explaining the components that I have on my chart. Right. So first things first, on the top chart, uh, you have you will see that there is a thick colored line or the wobbly line or the curvy line, which is the moving average. I call this the 200 EMA. Okay. Then you can see this another wobbly colored curvy line, which is called the 40 EMA. And then I have this thin, more curvy, more curly 8 EMA. Okay, so these are the 3 EMAs that I have, of which 240 are the most important. I use the 8 just to kind of have as a reference point that basically hugs the price action, which in this case on my chart is depicted by standard candles. No Heikanashis, no fancy footprints, just plain simple candlesticks. Uh, and talking about candlesticks, you will see that my candles are actually colored slightly differently. They are not the usual red green colors. They are basically based on whenever the price basically breaks the 40. So on the upside, if price breaks above and closes above 40, then it basically publishes blue color, and then if it goes below the 40, it publishes a yellow color. So that's that. So you can see that once we kind of gained, we were all the way down below the 40, and then once we recovered the 40, then it became blue again and then yellow again. So yeah, those are the candles and my moving averages on the chart. Now beyond those curvy, curly moving averages, you will also see a lot of very straight or horizontal colored lines. What are those? Okay, so if you can see, there are two blue colored lines, right, right on top here, and then here. So this one and this one, they are nothing but the pre-market high and low, right? So this line and this line is the pre-market high low for, in this case, gold. I trade gold, I trade most of the indices, and I trade copper. I used to trade bonds, but I don't because of issues with the funding companies. But yeah, I trade copper, gold, crude primarily. I also trade the Nikkei index, NKD. I also trade 6E, which is the Euro futures. Anyways, we'll come to that some other day. But yeah, this is the pre-market high low, the two blue lines. You'll also see this yellow line just below the blue line. That's the pre-market open. So when the market opens at 6 p.m. every evening, that line basically comes out. So if I just scroll back, you'll see, and if I just try and minimize this, hopefully you'll see. Okay, there you go. So if you now see what I'm trying to trace. So the previous day's 6 o'clock line ended at this day's 6 p.m. and then a new line started here because the market opened here for this new day. So this is the pre-market open line, which starts at 6 p.m. and it will close at the next day's, or it will, this line will basically close at 6 p.m. the next day, which is how this previous day's line closed. Okay, so that's the yellow line, the pre-market open line. And then we have other key open lines which I use for my trading. As I mentioned that I usually trade the pre-market. You will see that I then start tracing some other market opens during pre-market. So in this case, this is the 3 p.m. or 3 a.m. Eastern open line, which is basically when London opens. So this is the London open line. Okay, it starts. So this was the previous day's London Open. It stopped at 3 p.m., 3 a.m. Eastern, and this one is a 3 a.m. open line, which is when London opened, which whatever level that London opened at, that's what the purple line basically depicts. Similarly, we then have this pink line, which is the US pre-market open. US pre-market opens every day at 4 a.m. Eastern, which is where this line came from, ended at 4 a.m. on this day, and then a new line started here, at 4 a.m. So right there, US pre-market. London opens at 3 a.m. And then once these two lines actually kind of come out, you will then see some more colored lines, obviously, on my chart. Again, they are all open lines. What are those? Let's get to them. Okay, so the next one in this sequence is the 8:30 news line. A lot of important daily, weekly news happens at 8:30. Right there, 8:30 New York time is this red line start. And if you again notice, this was the previous day's red line, which was the previous day's 8:30 open line, and it stopped right there. Okay, so one line stops, the other line starts. And then finally, in this sequence, this orange line is nothing but previous day's New York open. So regular hours open for NASDAQ, Dow, RTY, or Russell, or S&P 500, right there. 9:30, this line opens, and the previous day's line stops. So those are the open lines that I look for. Why do I have those? I believe that beyond most of the support and resistance lines that we usually draw on our own, it's important to have a perspective of what big traders are using, or where do big traders start buying and selling. And when I say big traders, I mean folks who are sitting in London, folks who are sitting in the US. I tend to basically look for those. Or if there are very, very important events from where prices started, like news, I want to understand where are those key areas of interest. So yeah, these horizontal open lines or high and low lines are really important in that perspective. And you can see, and they can also become very good targets for you to take profits or stop losses, or they will obviously act as very important support and resistance lines irrespective. So these are automated lines, they just come out every time uh, price hits that particular time frame on my screen. Right, so that's the top chart. And now comes the bottom half of the chart, which is where my years and years of personal trials and tribulations have kind of come to bear in terms of the fruits of labor. So this is my own scripted indicator. I thank a very close friend of mine for helping me out on certain aspects of this indicator, but uh, this indicator has been developed over a long period of time, a good part of almost 3 years. And why do I use it? Is because I see certain patterns on it which correlate with the price action that you see on the top half of the chart. So whatever patterns are actually happening on the price action, this indicator gives me kind of a different view of that same price action, and that allows me to take certain trades. And those trades have been coded by me in terms of A plus and A setups basically. So let me explain what these lines are. So first and foremost, again, just like the colored lines on top, you have the zero line, and that is the basis for the three main lines on this chart to change color. So whenever the three lines change color from positive to change color from green to red, that actually means that they're crossing the zero line. Okay, I'm not going to, so although you can see 4 lines here, I'm going to ignore, or we should ignore this middle dotted line here. I do a lot of research and development. It continues, so it's part of that. It has nothing to do with the current setup that I use. Okay, so we have 2 solid lines, 1 and 2. These 2 lines are called waves. Uh, okay, that's nice. I'm able to write decently. Hopefully people are able to read. And then this line, or what I call the triangle dotted line, is called the magic line. And there goes my skill set back to negative. Magic line on the waves, and the 2 waves. So uh, I'm basically looking for patterns of the 2 waves and the magic line combined. And what are those patterns? So I'll just simply, for the time being, only explain to you what those patterns are. I will explain how I take the trades and why do I take the trades, or where do I take the trades from an entry and exit perspective in another video. But basically, whenever I have the 2 waves, which is these 2 solid lines, for example, whenever both of them kind of go down, so like the first wave went down here and the second wave finally went here. So this is what I call a double 3. Double meaning both the waves now are down or negative, and 3 meaning on the 3-minute chart. Yeah. Okay. So a double 3, and then a double 3 should also have the magic line below as well. So a double 3 is this condition. So at the same time, now you can kind of follow what I'm trying to do here. You can see that this is a double 3 here as well. In this case, it was a double 3 short. This will be a double 3 long, where the first wave was already green, tried to go red, but then remained green up again, and this wave became green. So this place is a double 3, and the magic line was above. Same thing again here. You have both the waves going down and the magic line going down. So this is again a double 3, right? and double three down. Again, you can now see where the second pattern kind of emerges, where what I call an S3 or a single three. Again, a single meaning only one wave went up and the other one remained below. So I don't really care about when it goes up, but I care about it when it goes down and it matches back again with the whenever the basically if you now follow what I'm saying, whenever three colors are all together, when they become together, that's when the magic happens for me. So every time all three lines are of the same color, whether from a double perspective, in this case, there are only two lines that became green, the third line was still red. Here, the two lines now became red, so that's an opportunity, but because it's slightly different from this double, I call this a single three. Okay, and that's that. These are my two codes, a double three and a single three for taking trades on the 3-minute chart. As I said earlier that I also use the 15-minute chart in conjunction with the 3-minute. I'll just quickly skip to the 15-minute chart to show you what it actually looks like. And there you have a 15-minute chart on gold. You can see gold is right here. And the only difference, again, you can see that the indicator is basically the same. It is the same. There's no difference there. The only difference is that the cloud on the 15-minute is different. In fact, all the three moving averages are the same. This is the 200. So 200 here, 40 here, and the 8 here. Except for the cloud on the 3-minute chart was filling this gap, whereas the cloud on the 15-minute is actually filling the 840 gap. That's it. There's no other difference. So how do I use these two charts, the 3-minute and the 15-minute, in terms of really playing the doubles and the singles that I just talked about? I will be sharing that in an upcoming video. So stay tuned for that. And if you have any questions on my setup, please do share. And I hope that that I was able to make sense of what my chart looks like, and that we can probably use in the next video for understanding my strategy for the patterns that I see. How do I trade those patterns? How do I enter? Where do I exit? And make money. All right. So hope you like it. Thanks for joining. Trade carefully and trade nicely and stay green.